This is Nightly Business Report with Bill Griffith and Sue Herrera.
Trade hits tech. Tensions are simmering, and today the heat was on one of the most influential sectors in the market.
Drowning in debt. Millennials are hitting midlife, and new analysis shows that they're in worse financial shape than other generations and may never recover.
Pomp and circumstance, a billionaire's graduation gift. Those stories and much more tonight on Nightly Business Report for Monday, May 20th.
And we do bid you a good evening, everybody, and welcome. This was a pretty tough day for tech. Semiconductor stocks were squeezed on two fronts. There are the trade concerns, of course, which we'll get to in a moment. But then late today, there was a report that the Federal Trade Commission is investigating Broadcom, a dominant player in this sector. The agency is reportedly widening its antitrust probe, looking into the tactics used by Broadcom to sell its processors. That sent that stock down about 6% today. Broadcom was already among the semiconductor companies trading lower on concern that they will no longer be able to sell products to China's telecom giant Huawei. The Trump administration recently added Huawei to a U.S. trade blacklist, effectively barring firms from doing business with it without special approval. And American companies have already moved swiftly to comply. Google, for example, has cut access to some of its Android services on Huawei smartphones. Huawei's reach into the global technology industry is broad, which is why some say this latest move has pushed the trade war into a new phase. Kayla Tausche takes a look at where things stand for us tonight.
In the week since the U.S. and China last talked trade face-to-face, the rift has widened between the two countries. President Trump doubling down, blaming China for reneging.
We had a very strong deal. We had a good deal. And at the end, they changed it. And I said, that's okay. We're going to tariff their products. And we put a 25% tariff on their products.
China's foreign ministry says that deal never existed. The U.S., a foreign ministry spokesperson said, has extravagant expectations. A fraying relationship on trade now threatens geopolitical issues. A U.S. warship sailing near territory Beijing claims in the South China Sea. Chinese state television airing anti-American movies in primetime slots. CCTV saying on social app Weibo, the Korean War era films echo the current era. And Iran's foreign minister suggesting to China the countries could team up against Washington to uphold the 2015 nuclear deal. Secretary of State Mike Pompeo and China's Foreign Minister Wang Yi spoke by phone over the weekend. The State Department said the two discussed Iran and elements of the bilateral relationship. China said Wang warned the U.S. not to go too far in harming its interests. Its main business interest right now is telecom giant Huawei. Google suspending Android service from new Huawei devices after the U.S. put Huawei on a blacklist last week. Commerce can ban any involvement of Huawei in telecom projects, but may allow some equipment to be purchased to avoid disrupting some rural networks. U.S. companies impacted by the trade war are cutting costs first and then headcount, according to Morgan Stanley. If the re-escalation doesn't get resolved soon, its analyst says a recession becomes increasingly likely. For Nightly Business Report, I'm Kayla Tausche in Washington.
Kayla just mentioned the airing of anti-American movies in China, and as Eunice Yoon reports, that switch was sudden.
If you had a movie night over the weekend in China, you might have thought that you were living in the 1950s. The state broadcaster CCTV changed its programming lineup to include 3 anti-American movies featuring China's triumph over America during the War to Resist America and Aid Korea, or what Americans would call the Korean War. And the Communist Party's Global Times newspaper today said the China-U.S. trade war reminds us of the war in Korea when our persistence in the battlefield and continuous victories finally forced the Americans to bow down at the negotiating table. With negotiations still at a stalemate, the anti-U.S. rhetoric is seen as a way to prepare the Chinese public for a protracted trade war. Sources told CNBC late last week that the next round of U.S.-China negotiations were in flux. And today, the foreign ministry said the only hope for a breakthrough would be if negotiations progressed with mutual respect. In the Chinese business community, there's growing pessimism that the two sides will get a trade deal, and people here are telling me that if there isn't a trade deal by June, prepare for the fight to get even worse. For Nightly Business Report, I'm Eunice Yoon in Beijing.
The trade war with China could be a double whammy for Apple if it lasts for a while. According to one Wall Street analyst, ongoing tensions could prompt Chinese consumers to buy smartphones from Chinese companies instead of from Apple. And even if Chinese consumers were still inclined to buy iPhones, a new wave of tariffs could increase prices, which might reduce demand. Apple was the worst performing Dow component today, falling more than 3%.
Apple not only weighed on the Dow, but also the broader market. The NASDAQ, as we mentioned, got hit the hardest. Here are the closing numbers. The Dow Jones Industrial Average fell 84 points to 25,679. The NASDAQ was down 113. The S&P 500 was off 19. But despite today's pullback, it is good to remember that the market isn't all that far off of its all-time high. Mike Santoli has more.
The market owes its resilience to a rush toward safer stocks and bonds as investors migrate away from risk. The S&P 500 index has managed to hold within about 3% of its recent record high, thanks in part to Treasury yields falling to 2019 lows, which has much to do with worry over global growth and an expectation that the Federal Reserve will cut interest rates later this year to support a vulnerable economy. Shares of stocks that act somewhat like bonds have been clear leaders. Utilities and steady consumer staple stocks have vastly outperformed industrial and small cap stocks, groups more reliant on a better economy. This has led some strategists to argue that the broad stock indexes are sending a less upbeat message than would otherwise be the case for a market up some 14% less than 5 months into the year. Investor sentiment similarly seems more subdued than usual after such a strong market recovery from the December lows. Surveys of retail and professional investors show a sharp drop in optimism in recent weeks, and cash has continued to flow out of stock funds at a pretty heavy pace, a sign of further investor caution. Low bond yields and cautious investors already braced for bad news could continue to help support stocks as the market absorbs details of the trade standoff, but that would probably require the economic data to hold up well enough to counter recession fears. But if the economy doesn't falter enough for the Fed to cut rates as the bond market seems to want, can those same safe stocks keep holding up the market? And could a shift in leadership to riskier stocks happen without an all clear on the trade front? Those are the questions facing an apprehensive Wall Street heading towards summer. For a Nightly Business Report, I'm Mike Santoli.
Dozens of shoe retailers are now asking the White House not to raise tariffs on footwear. Nike, Adidas, Under Armour, among others, have asked the president to remove their products from the proposed tariffs list on goods imported from China. They say the 25% levy that's proposed would be catastrophic for consumers, companies, and the American economy as a whole.
The head of the Atlanta Fed expressed confidence in the economy, but said he wasn't sure if the next move in interest rates would be a hike or a cut. Raphael Bostic said that there are risks in the market that speak to both scenarios.
There are risks out there in the marketplace that would suggest the economy may perform worse than we'd expect, and in that case there'd be a cut. But there are other risks that would suggest the economy might actually do better. Suppose that the trade negotiations end up in a way that is beneficial for the U.S. economy. We might see a lot of the uncertainty be viewed as going away, which could trigger a lot of investment and really heat up the economy quite quickly.
The market right now is pricing in just under a 50% chance of a rate cut in September and a more than 70% chance of a move lower before the end of the year.
Time to take a look at some of today's upgrades and downgrades. We begin with Target tonight. That was upgraded at Morgan Stanley to equal weight from underweight. The analyst says that the retailer is showing that it can survive in an increasingly competitive sector. Price target now $67. Target rose more than 1.5% to $72.08. Morgan Stanley also upgraded United Airlines to overweight from equal weight. The analyst cited management strategy and the airline's loyalty program. Price target $110, and that stock was up a fraction to $81.74. General Dynamics was upgraded to buy from neutral at Goldman Sachs. The analyst cited improving cash flow as well as the stock's valuation right now, and that price target is now $204. The stock was up more than 1.5% to $169.29.
Bristol-Myers Squibb was downgraded to hold from buy at Argus Research. The analyst cites concerns over the merger with Celgene and specifically with Celgene's drug pipeline. The firm also notes Bristol's loss of exclusivity for a number of drugs over the next few years. Shares fell 1% to $46.31. Tesla's price target was cut to $230 at Wedbush Securities. The analyst cites concerns over the company's 2019 delivery targets. The rating remains neutral. Shares fell more than 2.5% and finished down below that target at $205.36.
Still ahead, what happens when supply chains are soaked?
I'm Contessa Brewer on the Mississippi River between Illinois and Iowa. Spring is a crucial shipping time for the nation's farmers, and yet here we are, and there are no barges passing through these locks. I'll explain why coming up.
Fannie Mae and Freddie Mac have to raise capital before they can be privatized, so said their head regulator at a conference today, who also noted that there are a lot of options on the table.
Treasury has 80% of the stock via warrants, so we're going to look at what Treasury is going to do. We're going to look at what we can do to build equity. One of the options on the table will certainly be a public offering, but we don't know that yet, but that's got to be an option on the table if we need to build that large amount of capital.
As we've reported, the Trump administration wants to release the two enterprises from federal control, which they went into during the financial crisis.
Oil prices rose today after OPEC hinted at a possible extension of its production cuts. Member countries decided to explore options that will be ultimately decided at that June summit coming up in Vienna. Last December, remember, the group moved to cut output by more than 1 million barrels per day. Domestic crude settled above $63 a barrel. It's up just under 40% so far this year.
Ford is cutting 7,000 jobs. That's about 10% of its global white-collar workforce. The job cuts, which include voluntary buyouts, are expected to save the company about $600 million annually, and they are part of the automaker's broader restructuring plan. Most of the layoffs are overseas, with about 2,300 coming from the U.S. This round will not impact Ford's hourly factory workers.
Shipping has ground to a halt on the Mississippi River because of historic spring flooding. It's a double hit for farmers. They've already been caught in a trade war, and now they are sitting on soybeans without a way to get them downriver. Contessa Brewer, as you saw, is in Rock Island, Illinois.
It's quiet on the Mississippi. No barges moving through the locks, though this is a crucial time for shipping for the nation's farmers.
One of the reasons why farmers located in the middle of the country, like in Davenport, Iowa, are international entrepreneurs is because they have an effective inland waterway system that can move a lot of product long distances at an economical price point.
Not so this spring. The winter storms, massive snowmelt, and rains have inundated the farm fields, overflowed levees, and swamped Davenport, Iowa with record-breaking floods.
Normally, the water would not be quite so far up on these gates. We are in flooding condition right now.
Earlier this month, the locks flooded. High water has shut down multiple locks for months, and there are no detours around a closed lock. So though a barge may move short distances on the Mississippi, it can't run the length of the river.
We would have expected in a normal year all of the fertilizer for all of the farm fields in Wisconsin, Minnesota, Iowa, Illinois, Missouri should be up here by now and actually on the fields.
The Mississippi River is an important route for shipping grain, steel, petroleum, and other commodities, shuttling nearly $2 billion worth every year. But at Alter Logistics, the barges sit empty, moored to the shoreline, and the warehouse is bare.
It's impacting the whole supply chain. It makes you have to do different things. The goods still have to move.
But switching shipping options is expensive. It would require 16 rail cars or 62 semis to transport one barge load of soybeans. And overland shipping can double or even quadruple the costs. And for farmers already slammed by tariffs, the flooding and river closures add insult to injury.
It's having an impact on farmer profitability, our ability to get product to market.
Barge operators were hoping commercial traffic would be fully flowing once again on the Mississippi River this week. Instead, with more rain in the forecast, in Davenport the sandbagging continues, and it looks like these locks will remain shut down for several weeks to come. In Rock Island, Illinois, Contessa Brewer, Nightly Business Report.
Sprint and T-Mobile get mixed messages. That's where we begin tonight's market focus. Earlier in the day, the FCC chairman said he planned to recommend the agency approve the merger between the telecoms, but then hours later, both wireless companies received a different signal as the Department of Justice is now leaning against the proposed merger. Sources tell CNBC the FCC conditions on the merger may not resolve the DOJ's antitrust concerns. Sprint shares rose more than 18% to $7.34, while T-Mobile stock was up nearly 4% to $78.29. Dish Network agreed to buy another chunk of EchoStar's satellite service assets valued at $800 million. Dish will now acquire 9 direct broadcast satellites and some real estate properties in exchange for nearly 23 million shares of Dish stock. But Dish shares slipped today almost 6% to $33.24. After an 18-month battle, Air New Zealand reportedly picks Boeing over its rival Airbus. Reuters reports the airline decided to buy wide-bodied planes from Boeing in a deal reportedly worth more than $2 billion. Boeing shares fell a fraction today to $352.79.
International Game Technology missed earnings and revenue estimates, but the maker of slot machines and other gambling products did manage to return to profitability after reporting a loss last year. The industry is seeing good demand right now for its physical gaming machines and online gambling services. The stock today was down nearly 2% to $13.83. Xcel Energy plans to shut down its 2 remaining coal plants in Minnesota a decade earlier than scheduled, essentially putting the company on pace to become coal-free in the upper Midwest region by 2030. The utility holding company also said it's going to keep its nuclear power plant running until at least 2040, with a goal of delivering full carbon-free electricity by year 2050. Shares were up a fraction today to $58.39.
Millennials are approaching middle age in worse financial shape than every living generation ahead of them. According to the Wall Street Journal, Americans born between 1981 and 1996 have less wealth, own less property, have lower marriage rates, and are having fewer children than any generation since the Great Depression. Joining us now to discuss what that might mean for the broader economy and future generations is Scott Brown. He is chief economist at Raymond James. Scott, welcome back. Nice to have you here.
Nice to be with you.
Some of this is simply the time at which they were born and grew up, right? I mean, we weren't necessarily in a depression, but we were in a downturn in the economy, and that makes it tougher for everybody.
Well, there are two key issues here. One is that even before the recession, there was a trend where there was a squeeze going on really at the middle class. A lot of the bargaining power has shifted from employees to employers. You had a greater concentration of large firms. You've got a lower union membership and so on. But the Great Recession really made a lot of those trends a lot worse. And we know from studying past recessions that it tends to take a very, very long time. And in fact, even if after the recession that we had in the early 80s, those wages were typically lower than people that had graduated to, a couple years later or earlier, or even 10 or 20 years later. So it tends to have really long-lasting effects. And obviously, this was a major, major recession.
And this could put pressure on Social Security. As we talked about, they are having fewer children. That means fewer workers to pay into Social Security when more of us, baby boomers, and even the millennials, when they start to retire, start to draw money from Social Security, right?
Well, one of the big stories we have is that the slower population growth means slower labor force growth. So we're looking at a much slower GDP growth than in previous decades when the baby boom generation was coming in, when female labor force participation was on the rise. So we're looking at lower trend growth. One way around that would be to increase immigration, but we're going the wrong way there. Other countries face these similar kind of issues with the aging populations, and how are they going to pay for the people's retirements and health care.
So for the broader economy as we go forward, obviously we had the Great Recession. We've come out of that now, and the stock market is doing pretty well and the economy is doing pretty well. How long before we see those ripple effects in those younger people who are coming up into the workforce now?
Well, it may take quite a while. My hope is that the Federal Reserve doesn't really try to curtail this expansion too much, because if you do get an increase in general wages, then that forces firms to reallocate labor. you do get people moving up to higher positions, and that paves the way for younger workers to come in and get work experience. And that would all be very helpful. So we're crossing our fingers, I think, that things are going to continue to improve. But I think I'd watch for the Fed to maybe cut rates in the months ahead to help keep this expansion going.
Scott, thank you. Scott Brown with Raymond James.
Certainly many millennials may be saddled with student debt right now, but a few hundred graduates of Morehouse College just hit the student loan lottery. Robert Frank explains.
Billionaire Robert Smith surprised the 396 graduates of Morehouse College yesterday with what could be the greatest graduation gift ever.
My family is making a grant to eliminate their student loans.
Now, the exact amount of paying off all those loans is still being negotiated, but Morehouse says it could be in the tens of millions of dollars. Now, many asking today, who is Robert Smith? Well, he is the richest African American in the country with a net worth of about $4.5 to $5 billion. His fortune comes from private equity. He's the founder and CEO of Vista Equity Partners in Austin, Texas, which focuses on enterprise software and data companies. Now, Smith once said that of his nearly 300 buyout deals at Vista, he has never lost money. Now, Smith grew up in Denver, where his parents were teachers. He went to Cornell and then to Columbia for his MBA. He started out as a chemical engineer at Kraft and Goodyear and then went on to do Goldman Sachs in San Francisco before founding Vista in 2000. He has used his wealth for big gestures. He bought the most expensive home sold in downtown Manhattan last year, the $59 million penthouse of the new Getty building. He also owns homes in Malibu and Austin, Texas. He was the first African American to sign the Warren Buffett Bill Gates Giving Pledge, promising to give away at least half of his fortune during his lifetime. He gave $50 million to Cornell, donated the former homes of Martin Luther King to the National Park Service, and has given generously to the Smithsonian and Carnegie Hall. Many of the Morehouse students said they plan to honor Smith's request to pay it forward. One student who had $25,000 in loans said, quote, "This gives me a new start on life." For Nightly Business Report, I'm Robert Frank.
Still ahead, do you know more about economics than a high schooler? Well, we'll soon find out. The IRS audit rate dropped again. According to new figures, the agency audited about 0.6% of individual tax returns last year. That's the 7th consecutive annual decline. Audits of wealthy households dropped to their lowest levels since the IRS began reporting the data in 2008. The agency, which has been hit by budget cuts, is in the process of asking Congress for a funding increase.
Well, the best and brightest high school students are putting their economic knowledge to test. Teams today competed in the National Economic Challenge in New York, and this year Andrew Ross Sorkin moderated the event and crowned the next potential Jerome Powell or Janet Yellen.
At the 19th Annual National Economic Challenge, put on each year by the Council for Economic Education, students are quizzed on principles in economics.
Land is a factor of production. What are the other three factors?
Capital, entrepreneurship, and labor.
That is correct. And put to the test to apply these principles to the real world.
Assume a consumer is maximizing utility in the consumption of bread and cheese. Further assume that these are the only two goods being consumed. What will happen to the marginal utility of bread if the price of cheese decreases?
It increases.
That is correct. These are the brightest economics students in the nation who competed in a field of 11,000 teams to reach the championships here in New York City.
What is the most likely cause of an inverted yield curve?
An impending recession and the yield on longer-term bonds being lower than the yield on shorter-term bonds.
This year, Mount Hebron High School won both the David Ricardo Division and Adam Smith divisions. A first in competition history for one school to take home both trophies.
How did you guys get into economics to begin with?
It's actually really fun to learn, and it's not just something you do for a competition. So that would be my moment.
Okay, so we're not just nerding out here, is the point.
Nan Morrison, head of the Council for Economic Education, explains the value of this competition.
Their learning goes far beyond just a recitation of facts. They really understand how this stuff works, and it's incredibly rewarding to watch them.
What do economists call a good that is rival and non-excludable?
A common resource.
Common good.
You are both correct.
For the third year in a row, the U.S. faced off against China, and China was victorious in both rounds. For Nightly Business Report, I'm Andrew Ross Sorkin.
And finally tonight, the Game of Thrones series finale set an all-time ratings record for HBO. The show drew 13.6 million viewers in the initial airing of the episode last night. If you add in replays and early streaming, that figure climbs to more than 19 million.
No spoilers here. Before we go, let's take a final look at the day on Wall Street. The Dow was down 84 points to 25,679. It was the NASDAQ that got hit the hardest, with semiconductor stocks leading the way, down 113 points, and the S&P was down 19.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.